How's it going, everyone? It is Friday, June 7th, 2024. Let's look at the picks so far, and there was no pick on yesterday's video, and I explained my reasons why in that video. Let's look at what we have right now. So let's start with the easy one here, KSS. This was a broken earnings time spread. This is going to expire for a max loss today. So if you can get out for like a penny, then do that. I am unable to, so just max loss there. Not much we can do about that. I'm actually going to remove it from our list. Okay, TSM. TSM, we took nice profits in the AM today. So broke out here on June 5th on this nice over this horizontal resistance. Also the market breakout. Now, we knew that on this breakout, it was not likely we get a ton of follow through. So we want to be in more of a swing scalping environment. So you take it somewhere here. If I zoom in to the M15 chart, you take it around, take a nice $4 profit here. So you take it somewhere here around 62.50-ish, and then you have a target over here. Get out for around $3 or $4 at the top, and that's a nice win over here. If you're still in the trade, you can still take a smaller win on it right now, but I would start to get to the sidelines on these trades. We got the breakout. I think we are just going to stall for a little bit and then pull back. So I don't want to be holding a whole bunch of swing longs. We also have the FOMC meeting and the CPI release next Wednesday. So those are going to be important numbers. That's going to cause some market movement. And you want to really see how, if this is going to hold or not. It's up to you, but I want to take a more shorter term approach in my swings, find strong stocks, and get in and out of those trades. So TSM, we got a nice win on that stock, and we're just going to go to the sidelines. And if it sets up again, then we're going to enter in again, but we don't have the market tailwind to really stay in a whole bunch of moves. So I'm just marking that on my list. Okay, next one we have is LSXMA, Liberty, because I always mess up the ticker name on this guy. So compressing for a little bit here, so is the market. So not necessarily relatively strong or relatively weak. Let's zoom in maybe to an M15 chart, see what's going on the past couple of days. So we've made this big move, and we've just been digesting these gains so far. What I like is that we haven't retraced too much into this move, but there looks like some temporary support at around 2074, maybe somewhere around here. So I think if there's any sort of market pullback, the stock is going to break down. I'm okay with holding this short for the time being, as long as it maintains, this doesn't really give back any of the gains that we had on the 4th. So that's still in good shape. And then we have our WDC put credit spread. Came back here, testing our trend line here. That's also still in good shape. Moving sideways so far. So overall, not too worried about that. Okay, so market so far. Again, long term, we're mildly bullish. Fundamentally and technically, there isn't a lot of maybe there's not really a major catalyst for the market to go off of. I've been thinking a lot more about on the fundamental side, what prompts asset managers to buy. And one reason is really good valuations. The other reason is maybe the rate cut expectations are reduced. Maybe inflation really comes down. Those are because they're looking fundamentally at this whole thing, right? So those are the reasons that they would buy, and so that would create an upside move. But if none of those things happen, then they don't really have any incentive to buy. They're just going to be buying dips because they're kind of riding this momentum and getting a really good price point to enter on these trades. They get a good price point, then we get the retailers who come in at the very end, and they push that move higher to that new all-time high. So they're probably going to wait for another dip is what I think. They're not going to chase any stocks. So we have to trade like the institutions. We got to follow what they do. And that's how we're going to structure our trades as well. Shorter term outlook, a little bit more, still mildly bullish, a little bit more neutral. Again, I think we're going to have this compression and pullback. So I don't want to put on any sort of long positions here. It's also a little bit too early to put on any short positions. I feel like I'm front running this a little bit. And we also have still a mild market uptrend here. Maybe if I drew a channel like that, that could be one. But we still have a slight bullish trend. So I'd have to pick my spots carefully and pick my stocks carefully. Liberty's this one exception here where it's still proving its worth a couple days in. So, you know, a very, very weak stock is something I feel more confident holding on. And even then, I would have a smaller size than I would if I'm going long. I think premium selling strategies are going to be the favorites here. I'm not going to recommend this in the video because I'm still learning these weekly at the monies, but I did take a weekly at the money on CLSK. I sold, and you can see there's I've marked a whole bunch of lines here. There's just a whole bunch of high volume candles that comes into play here. Right, you can see just a whole bunch of volume coming in. These are tails and wicks of candles, so there's a whole bunch of stopping points for this stock. But essentially, I took the 726.14 puts out of the money, so it comes around right here, and then I sold the 1550 puts, next week's 1550 puts. So that way, one, you see the structure is a very sideways looking structure. We have a clear line in the sand. After this earnings break, it's moving sideways, so we can capture a whole bunch of premium. And we are getting 1% of the premium on the strike price. It is, I think, on the lower side of the price. I think I was reading Dave's comments on the weekly at the money post. He said he prefers stocks with at least $50. The price is at least $50. So it may be a little bit low, but I'm just trying out some of these. I'm not going to recommend it in the video because I don't feel comfortable giving this as a recommendation. But what I will say is that if you are new to selling premium, definitely try a put credit spread on the stock. It's pretty neutral, slightly bullish here. It's holding those gains. So $12 is pretty good, but you can probably get the $14.13 put credit spread, the 628 one. So I'll just show that quickly here. If we look at the months, so let's close this. Let's go to June 28th. So if you sell, and let's do all strikes here. You can sell the 14 strike, buy that. You can get a nice 25-cent credit on this guy. So that's what I would do if you can get a fill on that. Would I recommend it for the video? Maybe. It depends how aggressive you feel with your put credit spread. Because I feel we're going to get a market pullback, I'd want to wait for that pullback before entering spreads. If you're like, hey, look, I feel pretty good that even if there's a pullback, CLSK is going to be good, then I enter the spread now. And then you'd get your fill. So you can do it either way. I'm going to end up not recommending that for today's video, just because I want to see this pullback and this bullish hammer coming off support, and that's when I feel comfortable entering these put credit spreads, because I get the market tailwind and the market gives me a little bit of cushion. We might get some stock liftoff, and I know I distance myself from the action. I don't have to worry as immediately about the stock tanking versus if I sold. Like on April, I made a couple of mistakes where I sold a PCS towards the end of this move here, March and April, and then I had to take a heat, especially on a move like this that comes a little bit more unexpectedly strong. I had to close a lot of PCSs for a loss because the market went against me and they took down those stocks. So I'm really trying to choose my entry point carefully on those kind of positions. So yeah, I mean, today's pick here, I'm not really going to give any new picks, so I know it's probably 2 videos in a row with no new picks, but again, I really just want to be patient. I don't want to be forcing trades when I don't need to. There were some nice day trades today, so I'll highlight a couple of day trades that you could have taken. on my tags, just as some examples here. So Mobley was a really nice one earlier today. Oops, let's look at this. Wow, that really took off at the end of the day. That's nice. So nice grinder, held the gains, and then started to get some lift off later in the day. Huge volume. So that's like, if you only traded that as your long, you would have been in good shape. Let's look at BSX. Double top here kind of died off a little bit. Pins is not bad. This has a stair step, compresses, breakout, compresses, breakout. So you need to get into it on the compression. So, you know, there's a couple of nice ones on the long side here. On the short side, VSCO was a nice one, grinded up. Now it's finally breaking through this support level. Took a million years, but it finally did it. So that's a nice little trade for today. CN was really nice. If you look at it on the D1 chart, really nice breakout. Just kind of grinding lower. Not a ton of volume on it today, but really nice clean price action. So there's a couple of trades you got to take in today on the day trading side, but in my opinion, I think this is a good day to just not really do too much. Just sit in your hands, wait for your next opportunity. Mark a lot of charts. So mark just your strong D1 charts, weak D1 charts, see what's there, and then wait for the next opportunity. I think going forward, I've been given a couple more swing trades, some more premium selling strategies in June. And the strategies I'm going to give are going to reflect the market conditions. So in May, I gave a lot of day trades. I was focusing on a lot of day trades, and I felt comfortable giving a lot of day trades. I've given some short swings, some earnings time spreads. If those opportunities set up, we're probably not going to see a lot of earnings time spreads until earnings season. So coming up in July, maybe another month or 5 weeks or so when earnings seasons kick off with JPM. So it's just going to be a mix of strategies. And so to make up for some of these days where I don't give any picks, I may give 1 or 2 picks on these days right here where we do get the right opportunity, and we can trade those effectively. So that's it for you guys' video. Nothing too much has changed. Just be patient. Keep it light until the FOMC statement. Favor more premium selling strategies and wait for your opportunities on these market dips to enter those strategies. Thanks for watching, everyone, and I will catch you all on Monday.